Pleasant good morning, ladies and gentlemen. It's a pleasure to have you join us for Scotia Investments Jamaica Flagship Economic and Finance Forum. Today's discussion focuses on a very important topic that we as a country have grappled with for some time. That is, how can we utilize tax reform to improve economic growth and competitiveness in the Jamaican economy? An inefficient tax system distorts relative prices and causes an oversupply of resources to incentivize activities. These incentivized activities may not be well creating from a wider society perspective, even though the private returns are magnified due to the incentives granted. The low level of social returns means that the country doesn't benefit from these activities. It means, therefore, that the government must run a larger fiscal deficit or tax an alternative economic activity to compensate. The net result is that we end up with a suboptimal usage of the country's resources, thereby lowering potential output and economic growth. Having an efficient tax system is therefore a necessary condition for a competitive and vibrant economy. It is against this background that we have assembled a distinguished panel to discuss tax reforms that should be implemented to improve the country's competitiveness. The panel is comprised of Ms. Anya Schnoor, CEO of Scotia Investments Jamaica and President of the Jamaica Security Dealers Association. We also have Mr. Joseph Matalon, President of the Private Sector Organization of Jamaica and Chairman of the ICD Group of Companies. Mr. Danny Roberts, Director, U. Lawson Shearer, Trade Union Education Institute, UWI Mona. Mr. Brian Denning, Tax Partner, Pricewaterhouse, Jamaica. The flow of today's proceedings will see each panelist having up to 15 minutes to give their opening remarks. Once we have taken opening remarks, then we'll move to an open discussion where questions will be taken from our listeners and viewers on the internet and also the live audience. I'm going to start off by asking Ms. Schnoor to give her opening remarks. She'll be followed by Mr. Joseph Matalon. Then we're going to move to Mr. Danny Roberts, and we'll close out the first session with Mr. Brian Denning. Ms. Schnoor.
Thank you, Adrian. Thank you for taking the time to speak about a topic which I think is critical to our national development. Our webinar series is an important innovation in our client communication program as we seek to provide a wide audience around the world with access to information from professionals who are the best in the business. As we thought about a topic for today's webinar, which would resonate with our audience, tax policy and growth came to the forefront. Both are interconnected and each is critical to the future and our ability to grow our way out of our fiscal realities. The key reality that Jamaica must face as we look to the future is that we need an economic framework which is competitive and generates a higher return to the factors of production, that is labor, land, capital, and entrepreneurial talent. The Global Competitiveness Report for 2010-2011 ranks Jamaica 95 out of 137 countries in overall competitiveness. The World Bank has noted that there has been an annual decline in labor productivity of 1.5% per annum between 1973 and 2007. Recent data from the Jamaica Productivity Center shows that the trend has not been reversed. With those facts, it's no wonder that Jamaica's economic growth has been anemic by world standards, notwithstanding the significant amount of foreign direct investment that has flowed into Jamaica over the last 15 years. To get a different result in this new decade, we're going to have to do things differently. Tax reform, as I'm sure Joe Matalon will speak to in a few minutes, is one of the critical areas which our country needs to focus on to improve its competitiveness. An inefficient and debilitating tax system is an institutional weakness in Jamaica. Here again, study after study has indicated the need to have comprehensive tax reform program to no avail. What we're seeing is a piecemeal approach to taxation meant largely to raise short-term revenue for the government's coffers, rather than an approach that uses the tax code to promote business efficiency that will lead to sustainable, increased revenues to run the country. An IADB report on Jamaica's tax system indicates that the country has over 200,000 different tax incentive programs. In fact, the author notes that the figure could be significantly higher than the 200,000, given the difficulty to even identify some of the incentive programs. The World Bank ranks Jamaica 170 out of 178 countries when it comes to the difficulties in paying taxes. You would think that a country in need of tax revenue would make it easier for its citizens to pay their fair share. We welcome the announcement by the Minister of Finance that he is committed to tax reform, but we would urge him to move this forward expeditiously. The serious competitive impediment that our tax structure has to attracting and retaining business in Jamaica is real, and we risk falling further and further behind our fellow regional partners if we don't act quickly. In looking at the Minister's 2011-2012 budget presentation, I would like to focus on two areas, which as a representative of the financial services community, we welcome. The removal of stamp duty and transfer tax on securities. This policy change has long been advocated by the financial industry and will allow for increased profitability in capital market transactions as it frees up capital to participate in the productive activities. This in turn will stimulate the development of the corporate bond market as it allows these bonds to be traded in the secondary market. Jamaican companies can now seek to raise cheaper sources of financing, thus stimulating the economy and obviously ultimately employment. The second area is the removal of stamp duty and transfer tax on the refinancing of mortgages and loans. This policy change will also have a positive impact on economic activity. By increasing the competitive forces in the marketplace, interest rates will be reduced, which will allow persons to afford, say, a home purchase more easily. This one move will create a secondary market for the trading in mortgages, which will totally reform this sector. This will translate into increased activity in the construction industry, which has a wide effect on job creation. By just these two tax policy changes, the Minister of Finance has provided a real avenue for economic development. This, however, is just a start. For example, we would argue that the implementation of a punitive dividend policy for foreign resident holders of shares in Jamaican companies listed on our stock exchange does little to attract foreign direct investment. Our stock exchange, which has been in existence since the 1960s, has only a little over 40 stocks listed, while a small country such as Bermuda has over 8,000. We need to create an enabling environment for growth and look for ways to diversify our revenue base. By creating a tax environment which would allow for the development of our local stock exchange, we could facilitate companies using Jamaica as their hub in the Caribbean. Instead, companies are increasingly moving elsewhere where they are welcomed with open arms. I will stop here and turn the conversation over to my fellow panelists, who I'm sure will have a lot more to say on this topic.
Thank you, Ms. Schnoor. We'll move now to Mr. Matalon.
Okay, well, thank you very much, first of all, Adrian, for having invited me to be a part of this panel this morning. And I want to also congratulate Scotia Bank on the foresight that they displayed in developing this webinar series, and in particular dealing with this very critical national issue. What I want to do this morning is to, first of all, take us back to the diagnosis that was done of the existing tax system during the course of the work of the Tax Policy Review Committee back in 2003-04. Look at some of the specific issues that were identified with the tax system at that time, which I regret to say apply perhaps equally today as they did then. And then I want to finally wrap up by providing an outline of the tax reform recommendations which are a part of the PSOJ's economic policy framework. So dealing first of all with the effectiveness of the existing tax structure, there were a number of key conclusions that the membership of the Tax Policy Review Committee came to. One of the very important conclusions, I think, was the fact that the existing tax revenue depends very, very heavily on direct income and payroll taxes as a proportion of total tax revenues, and certainly to a much greater extent than in comparable jurisdictions elsewhere in the world and in the Caribbean. The implication of that is that labor is relatively highly taxed, with all of the implications that that has for productivity and international competitiveness, as well as our ability to save. The existing tax revenue structure is quite highly correlated to GDP growth, which is a plus, I believe. But that correlation could be even more greatly enhanced by the absence of the level of discretionary incentives and specific tax reliefs that exist within the system. One of the very interesting observations also was that Jamaica's tax effort, as measured by the percentage of GDP that is represented by tax revenues, is really not terribly high compared with comparable jurisdictions elsewhere in the world. Now, that might lead you to conclude that there is the potential for greater revenue mobilization, but at the same time, low compliance levels suggest that actual payers and those who are not receiving the myriad of special preferences that exist in the system are in fact relatively highly taxed. And that leads to some of the misallocation of resources that Adrian highlighted during his introduction. The existing tax system is or was determined to be mildly progressive, with obviously the direct taxes being more progressive than indirect taxes. But the fact is that the existing tax system also creates a relatively high burden on the lower income brackets in the country, despite the government's stated policy objectives for poverty alleviation. And one of the observations that we made in the course of the committee's conclusions was that we should not be trying to advance social welfare objectives through the tax system. Those objectives are most efficiently addressed through specific expenditure side initiatives. We also concluded that the existing tax structure, because of the relatively narrow base of that tax system, is relatively inefficient from an economic standpoint. And there is a cost to the economy and the consumer that can be reduced by making the structure more efficient while maintaining the same level of revenues overall. A broader base tax system where the base of income that is being taxed is as broad as possible and statutory rates of tax are held at the lowest possible rate are to be preferred to the existing system in Jamaica of a narrow base and relatively high rates of taxes imposed on those who actually do comply with the tax system. There were 6 or 7 specific issues that we highlighted arising out of the committee's work in relation to the current structure of taxes in Jamaica. One was an observation that the tax administration is relatively weak. And in that regard, we very much applaud the recent attempts at restructuring within the tax administration the merger of the various tax departments that has been announced by government. But the fact is that we need to put the resources in the tax system and in the administration to allow for effective administration. And the complicated system of rates and incentives must be recognized, encourage non-compliance, and make the job of tax administration even more difficult than it might otherwise be. As I've indicated earlier, the tax base is far too narrow due to reliefs and evasions, and therefore rates are too high. It was estimated at the time that something on the order of about 60% of total tax revenue is granted, potential tax revenue is granted in reliefs and incentives, and compliance is relatively low. Only 50% of individual tax revenue potentials are collected, while only a very small percentage of corporate income actually incurs tax. The extent of incentives is really unknown. I think one of the earlier speakers referred to the over 200,000 different incentive measures that exist. There are also horizontal inequities within the tax system, which include differential rates of tax, particularly of GCT, tax preferences to particular industries, and import duty reliefs. And all of this lends to a system which is, in our view, overly complicated. Several features of the existing system add to complexity, such as the various property value categories and caps, the different GCT rates, the myriad of different tariff headings, the 5 payroll taxes with the heart and education tax. We also identified certain efficiency costs in the current system. And we believe, as Adrian indicated at the outset, that the existing system creates several distortions, economic distortions, due to differential taxes, for example, on capital income, incentives to industry, preferential treatment of certain industries, and because of the overcomplication or level of non-compliance, which has led, we believe, to a misallocation of resources in the economy, which may be one of the principal explanations for our anemic performance in terms of productivity growth as well as economic growth generally. Now, I want to roll forward at this point to the PSOJ's economic policy framework, which was published in January of 2010, and to deal with some of the specific recommendations that were made under the section of that policy paper that dealt with the reform of the tax system. The paper holds that the inefficiency, complexity, and inequity of Jamaica's tax system acts as a major